Hi, Richard here, and it's the 6th of April, being a Wednesday, and this is a quick market update. Some weird scenes in the gold mine at the moment. We've had this incredibly strong bounce back from the sell-off following the Japanese earthquake, 12, 13, going on 14 days now, where it's come up and retested this previous support, now resistance line, which goes back all the way to July last year. That was at the end of the flash crash and some of the volatility that occurred straight after it. What are we expecting? Well, clearly this is an ABC. It's a correction, but this also looks slightly, well, it's impulsive in one level, but it's what's going to happen over the next few days will be vital to tell whether or not it is in fact a correctional B leg. And if that is the case, then we would expect to see a lot more downside, really pronounced downside. That would be resistance off this long-term trend line. In the event that we see new highs taken out, then this is a fourth wave leading up to a fifth, and that's the alternative scenario, is that we would clearly expect that overhead resistance up here over 5,000, that's 5,008 and rising, to be actually tested. So there's the two options. One is down, the other, which seems almost too obvious, is up, but it's this support line that's going to determine whether or not we get a significant move to the downside. And if that is the case, then we can measure what that downside is likely to be as we take an extension off this move as it stands at the moment. And first stop would be 4630, 4450, and if we really got mobile down to the 61.618 extension, which is down at 4170, around 4200 on the XJ 200. So just quickly then moving on to have a look at the US market. It's a similar pattern. You can see the ABC, the retracement back up, straight shot, the largest move since 2008. And it's not over yet by the look of it, although certainly it's starting to round out at the top here. So the target of 12,400 has not been reached. It's very close. We'd expect that if it did break through as a fourth wave, we can take an extension to the upside, and the way that we do that is work back to those marks and click here. So you can see that right now we're on the 61.8 extension, which is that classic Fibonacci extension. We could see a drop, support, and then a shot at 12,900 if it really gets going. If it really blasted through this, we'd expect it to see it to go all the way up, and of course the Aussie market would follow suit over 5,000. What's happening with the Australian dollar? It is currently testing overhead resistance. It's gone through, it's fallen back. We've had a retest today from the underside. In the event that there is support there, if that market, broader market scenario does play out, then we'd look to see this go up to 5.5 cents above parity, which is a really significant thing. And if you can go back to the weekly chart to have a look at where this line comes from and why it's important, is that it goes all the way back to 2006. So where it's acted as support, tried to act as support but didn't during the GFC, blasted through, came back up, underside resistance, tested off during the flash crash, and then back up now extraordinarily above 80 cents. Around 75 to 80 cents is our long-term average on the Aussie dollar. So how long this stays up above the average, time will obviously tell. Euro is currently testing, and I'll go to the weekly chart, this long-term overhead resistance, similar to what the Aussie dollar is doing, although the structure is different. Certainly this is a 1, 2, 3 to 4 to 5, fifth wave completion. In the event that it blasted through, well, gracious, something else is really afoot. But at the moment we're expecting this to be tested as it is at the moment. You can see the little long tail on this daily, that's the weekly chart now. Going back to the daily, you can see that it's creeping up, likely to test. So from a short perspective, we're certainly getting set once we get a confirmation that this market's breaking down, that we're going to have a crack at that. But at the moment, you know, that mark there is really overhead resistance at 1.4300, which are good Fibonacci round numbers as well. Now, just contrasting that against the US dollar, you can see that what's happening here, and maybe I can do this to quickly show you, that didn't work, in contrast to what's happening with the euro, because they are a mirror opposite of each other. Here's the long-term resistance, long-term support on the US dollar, going all the way back to early 2008, where that 5 is. What we're looking at here is an ending diagonal, and it is currently looking like it's going to put the final leg down to the bottom of this lower trend line. Now, if that occurs, then we'll see the euro on this side push through, probably spike high, maybe even overthrow, just like this is overthrowing its long-term support and pushing down. The opportunity will be, again, the Aussie dollar, the euro will all reverse and fall down heavily. Ending diagonals always finish at the place that they start from. So there's a significant gap at 89.60 there, down to where it's currently trading at 75.80. And again, on the euro, you can see that that retracement would be likely to happen all the way back to 1.3. So significant shorting opportunities there. On the gold side, this overhead resistance here has been broken through, which is pretty interesting, given that the rise in oil prices raised a bit of inflation fears. What we're seeing here is a significant break. This is what we'd call a blast through. So it's stepped up, and it's likely to hit 1467 as our next target, and if it works its way through that, then we're really looking at 1520 as an upper target. Having said that, this also has the characteristic of a fifth wave. So we've gone 1, 2, 3, 4, 5, 3, 4, and up for 5 here. So to culminate around this 1467 would then potentially open up short opportunities. And the reason that I'm looking at that is because of this divergence that's happening between these two peaks here. This lower high is not demonstrative of this high. So the point is that this divergence often spells opportunity to the short side. When all of the market thinks that everything's going gangbusters, all of a sudden it reverses around and surprises the hell out of everybody. So that's that's gold. And then just looking at the financial sector within the Australian market, you can see what's occurring here. It's testing its overhead resistance, and it's starting to put up these doji stars around here, which mean that clearly there's a lack of buyer continuation. So therefore, the expectation in the event that there's any buyer weakness, that this would trade off to the downside. And on the materials side, we're looking at a similar situation with a slightly different structure. Overhead resistance, market unbelievably climbing up towards the overhead resistance. We'd look for it to stop there and then look for the short opportunities. The market force indicator has been absolutely spot on, telling us when to get in and when to get out. So stand by for those opportunities. If anyone has any requests, please don't hesitate to put them through to me. But in the meantime, we'll talk to you shortly.